On May 27th, Trump, the US president, publicly announced his decision to postpone the 50% tariff on European Union goods from June 1st to July 9th after a negotiation request from the EU. On May 28th, the Court of International Trade ruled that Trump's Liberation Day tariffs were illegal, saying he exceeded his authority, but the decision was paused by an appeals court on May 29th, allowing the tariffs to stay in place for now. What is a tariff? A tariff is an additional tax put on imported goods. Thus, this decision is the trade tensions between the USA and the EU, leading to positive changes in financial markets. The stock price index in the S&P 500, Dow Jones Industrial Average and Nasdaq Composite rose by 2.1%, 1.8% and 2.5% respectively. The stock index growth shows that investors are more optimistic. The reason is that the delayed tariff also postponed uncertainty in the economy, allowing investors to estimate business earnings more easily. Thus, people tend to buy more stocks, making them more expensive. This tariff delay has further potential implications for businesses and consumers. Firstly, businesses now have more time to adapt to the future tariffs. For instance, they can accelerate the shipments of their goods to earn as much as possible before July 9th. They can also use this extra time to reset the prices of their goods to better deal with the future trade tension. Likewise, they may have more discussions about changing their supply chain, especially those relying on important raw materials. For example, businesses may start looking for local sources of raw materials to avoid the tariff's outcomes. Furthermore, as the tariff is delayed, consumers do not need to worry about the price increase for now. The reason is that businesses relying on imports are not likely to increase the prices to cope with increased costs, taxes in this case. Thus, consumers also have more time to plan their budget wisely. All in all, the economy has the potential to experience short-term progress after this decision. To summarize, the delayed US tariff on the EU has optimistic outcomes for investors, businesses, and consumers. However, this does not mean that uncertainty has fully disappeared. It is just postponed. As a result, the relevant agents should effectively use this extra time to get better prepared for the future promised tariff. On May 28th, NVIDIA reported a 69% year-over-year increase in its quarterly revenue, reaching $44 billion, exceeding the investors' expectations of around $43 billion. The main driver of NVIDIA's revenue growth was a 73% rise in data center revenue, marking $39 billion. This highlights that demand for AI technology has increased. After the report, NVIDIA's stock price went up by 4.4% the same day, meaning increased investor confidence in AI. NVIDIA's revenue growth has several financial implications. Firstly, the increased demand for AI means that businesses are heavily investing in AI infrastructure. Its increased stock also explains this point by showing improved market confidence in the technology sector. Moreover, this positive change may lead to a positive spillover effect. That is, other tech companies may also benefit from this report, having a greater motivation to invest in AI-related products and services. Additionally, the report implies that tech companies, including NVIDIA, may feel more confident and resilient despite geopolitical tensions like the US tariff on Chinese goods. To sum up, NVIDIA's revenue growth shows that artificial intelligence is no longer a future story, but a current economic driver. Increased investor confidence in technology, especially AI, signals that the next wave of economic growth might result more from AI infrastructure than traditional sectors. On May 29th, the Bank of Korea, South Korea's central bank, lowered the interest rate from 2.75% to 2.5%, its fourth cut since October 2024. The main reason for this cut is the economic slowdown. The Bank of Korea explained that the country's economic activity in the first 4 months of 2025 declined by 0.2%, mainly through the decreased consumption and investment. South Korea heavily relies on exports for its economic activity. However, global tensions and uncertainties like the US trade tariff and internal political instability put the economy under further pressure, slowing the economy. Thus, the Bank of Korea decreased the rate to make borrowing cheaper for consumers and investors. This implies people will spend less on borrowing from banks to meet their needs and wants, such as homes and cars. Thus, consumption is likely to increase, decreasing savings due to lowered returns. Likewise, businesses will also have lower borrowing costs. Therefore, they will also increase the borrowing to invest in advanced technology, cost-cutting, and more skilled employees to improve business performance and profits. As these two factors are the main drivers of economic growth, they may help the country leave the slowdown faster. For instance, the Kospi index, the country's major stock market index, went up by 1.7%, implying investors feel more optimistic now. As businesses are more encouraged to invest, they have a greater chance to increase their earnings. People who buy stocks know this and start feeling more confident and optimistic, increasing the purchase of stocks. Additionally, due to the lower returns from savings and government bonds, people tend to shift to the stock market. More demand in stocks allows businesses to increase stock prices, knowing that people are ready to pay more as they now need more. Thus, this might be a good opportunity for people to buy stocks as long as the prices are not very high, to have much higher returns later on. To wrap up, the Bank of Korea implied the possibility of further cuts to boost the economy even more. Further rate cuts could improve economic activity at a faster pace by pushing consumer spending and investment up. However, the central bank should be very careful when cutting the interest rate to avoid high prices. As consumer spending increases, businesses will be more eager to increase prices. Nonetheless, if the Bank of Korea manages to control the situation efficiently, the outcomes will favor consumers, investors, and the economy as a whole.